Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Friday, February 4th. This will be a technical analysis breakdown. So if you are somebody that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used to help make good decisions as a trader, then this will be a video for you. Before I get to the watch list, I first want to personally invite you to get signed up for the free live online class that I'm actually offering this evening, depending on when you watch this. So if you're watching this Friday morning, then yes, you've already missed the class. But on that note, the class will be recorded. And if you want to see it, then just drop me an email, which you can see there on the screen, clay@claytrader.com. And I would be happy to send that link to you. But again, like I said, the class has first got to happen. It'll be recorded, and then I can send that out. Or I do understand if you're watching this, but you already have something on your schedule and it's too last minute. In that situation, still drop me an email, and I would be happy to, like I said, send you a link to it. But if you can make it live, then definitely get signed up for it. So if you're liking what you see as I go through the video and you want to learn more about this tool, how it can be used, how it should be used to build consistency as a trader, then like I said, definitely get signed up for the class, or just drop me an email so I can send you a link to the event when it's all over. A couple of quick clarification points before I get to the stocks here. First off, the market is still open for a little bit of time, so you're not crazy. The prices that you see over here, let me make that a little bit easier to see there. But these prices right here, they are changing because, like I said, the market is open, so you're not crazy or anything like that. I like to do these videos when the market's still open. That way, sometimes we can capture some really interesting late-day action. And then second, I will be using the 30-minute time frame. So if you're a beginner to this, all that means that each one of these candlesticks, as they're called, represents 30 minutes worth of time. So first one here, ticker symbol FB, Facebook, or excuse me, Metaverse. But I'm sure you saw it in the headlines, absolutely destroyed today after earnings, but it is a very, very well-known stock. And when stocks like this get beat down this much, of course, that doesn't guarantee anything, but it makes it a very, very interesting setup for potentially, in this situation, maybe some sort of dead cat bounce move. So the level here that I think a lot of people have done, so when I do this here, I don't want to make it seem like this is some sort of groundbreaking move on my part, but in my mind, a lot of people have drawn that trend line right there. And when a lot of people have drawn the same areas or wondering the same things, call it a self-fulfilling prophecy, call it whatever you want, it can produce some very dynamic movements. And that's what we have here. So while, again, I can't say anything is guaranteed, is it plausible? Is it valid to think that if Facebook can come up here and break through that trend line, that right there could create quite a bit of upside buying pressure, even if it's just from a self-fulfilling prophecy angle? Absolutely. So in my mind, this general area right here around $240, very, very fascinating here headed into Friday and the next couple of days. And then as far as the support side of things is concerned, I think we're going to have to go back. We might actually have to change time frames here. Yeah, let's do that. So I know I said the 30-minute, but what I'm going to do here is just change to the daily time frame, meaning each one of these candlesticks now represents a day, because as you can see here, we're having to go way back into the chart's history here. Oh, wow. I didn't realize it. When's the last time? Okay, there we go. So next potential area of support going to be right there around 235. And then after 235, next key level of support down there around the 227 mark. So those will be the next levels. And these are coming from way back here in July of 2020. So quite literally years since the price has been down this low on Facebook. But overall, I know I'll be keeping an eye on it on Friday to see if there's any sort of dead cat bounce. Next one here, AMC, and I should note we're back on that 30-minute time frame. And the first update that needs to be done from a previous video I did is just a basic rule in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So going into the day, that 1520-ish level was an important level of support. But now that the price is broken below it, that would be considered an area of resistance where you can see after the price fell below it, it's just essentially been trapped below it. But the interesting thing here is check out the last 30 minutes. Last 30 minutes of the day, nice green candle here. So while that doesn't guarantee anything, of course, is that valid? Is it logical to think that maybe this thing's getting ready to potentially push up through that area of resistance? Absolutely. I mean, the price is certainly within striking distance of it. So that'll be an interesting dynamic to watch to see if the price can indeed get up to that level and push up through it, as that'll be the near-term level of resistance. And then for more of an overarching level of resistance, key level to watch will be that purple line there, the 50-period moving average. At $16, let's just call it $16. But that level is kind of irrelevant right now until the price can at first get up above that 1520-ish mark. As far as levels of support are concerned, headed into Friday, next key level to watch very closely going to be down there at 1425. So keep a close eye on that. But overall, yeah, a rough day here for AMC, but a very interesting last 30 minutes. So we'll see if that momentum can lead into Friday. Next one here, SNAP for Snapchat, and I realize that earnings will be out on this one, but what's so fascinating about this is they haven't even had earnings yet, but they've already been absolutely destroyed as a sympathy to Facebook. So it's a very bizarre dynamic to have something beat down this much without even earnings being in play. So with that being said, same logic as Facebook. Let's just get that trend line in play, and I assure you a lot of people have drawn that trend line. And if the price can get up through that trend line, as I said with Facebook, doesn't guarantee anything, but does it make it valid? Absolutely. And with that, the earnings coming, it's really, like I said, a super unique situation here. But if their earnings are even slightly, a little better than what was maybe expected, then you got to think this trend line will get destroyed, and there could be a very, a very solid movement to the upside. But then, as far as supports are concerned, like Facebook, let's just change back to the daily time frame here, because as you're going to see, it has been a long time since the price has been down this low. So we're, without exaggeration, talking years and years, with that next key level of support being down there at 23. And because of earnings, I'll map out one more just in case it is bad for earnings. This thing goes down that much more with another very important level of support being around $20.50. But yeah, if there is one that I would have to choose as the most interesting situation into Friday, Snapchat would definitely be it. Next one here, SKLZ. So lesser known stock, but it is in a price range that I know a lot of people are interested in with the sub $5 mark. And once again, I'm going to keep this very brief because I don't want to become a broken record and repeat myself over and over when the general idea is the exact same. And the general idea is here. You have that very steep trend line, the idea of self-fulfilling prophecies. And while there's no guarantees, it makes plausible sense to think that if the price can push up to that level, that create, I'm not going to say reversal, but at least a good, solid, tradable bounce. So if you like to play this price range, if you like the idea of very beaten down stocks potentially getting some sort of upside resurgence, even if it's just temporary from a trading standpoint, then, like I said, SKLZ, it fits down in that price range below the $10 mark. So I definitely have it on your watch list. Next one, PLTR, and this will mean a bit more to those of you that watched the video from yesterday. But as a quick recap, talked about how, the price had broken down below that purple line, so definitely not a good thing, but it was still within the range. But so let's see if this breakdown of that purple line, the 50 period, was some sort of leading indicator. And we got our answer today. Yes, it was a big leading indicator of bearishness as that breakdown has just continued to get worse and worse. And in fact, as we watch right here at the last 30 minutes, I mean, it's building, it's going to all new lows right now as I speak. So first I'm going to do is little how it's going to get rid of that level. And as I've already noted in past charts, just the foundational rule, when levels of support are broken, closes below, they tend to act as resistance. So that's going to be one of the newest areas of resistance at 1320. But in all actuality, a near-term level of resistance that is now more relevant, going to be right down there around the $12.80 mark. So if this thing does try to turn around at all on Friday and work its way back upwards, $12.80 will be that first key level of resistance. As far as levels of support are concerned, two main levels to watch. First key level going to be right there at $12.25. And then after $12.25, next key level down there right around the $12 mark. But yeah, no doubt about it. Yesterday was that leading indicator, and today there was just that much more bearishness. Next one, KAVL, a little bit of a different flavor from the past charts we've been looking at where everything's been getting beat up. Here we have one that sub $2 range that's had a very nice day, and then again, you look down at these volume bars, and you can see, in fact, the last 30 minutes of the day has been the biggest volume, and you can see these very nice candles. So the dynamic here that's really a question is, okay, there's no doubt about it. Strong close, strong movement, but is this the start of something even bigger? Now, maybe it's not, but think about what has had to happen for me to even be able to ask that question. Well, something has had to happen. Something big has had to happen, and those things have been accomplished. So that's actually a big question to ask because it requires something big to happen in the first place. So yeah, is this the start of something much bigger? I have no idea, but is it a question that now makes sense to be asking? Absolutely. So if you're somebody that likes to play momentum, if you're somebody that likes to play potential, breakouts, because up until here, nothing was going on, right? It's not like there had been any sort of bigger movements. I mean, this is, as I squeeze this down even more, and you look down here at the volume, I mean, the volume clearly stands out. So who knows? Maybe this is day one of many. Maybe this is just a one-day wonder. I have no idea. Nobody knows that, right? Nobody can tell the future. But what we do know is, hey, you know what? It's worth asking the question, oh, wow, look at this. Is it the start of something bigger? So if you like to play these sorts of situations, or at least keep an eye on them, definitely get this one on your watch list. Next one, SOFI, and same exact idea as some of these other ones, with a theme kind of being a bunch of stocks getting beat up. But all it takes is for one, halfway decent, bounce in the NASDAQ, and a lot of these stocks will, the tide will rise with everything. So at least it's worth putting in some of these, trend lines, aka self-fulfilling prophecy points. And we have that right here up around, let's call it the 1175 mark. But it's also very possible that, this bleeding is just going to continue. So, the strength of the bleeding, let's just keep an eye on this next level of support down here at 1075, which seems super far away, but I suppose you never know with some of these tech stocks and how they're moving. But if the price were to get down to that green line, 1075, and then even break through there, that would be very rough. That would not be a good sign at all. But it's also an area where I can see somebody saying, well, geez, it's bounced off there a couple times before. So does that mean that it's going to bounce off there again? Of course not. But is it plausible? Is it valid to think that the price could come down here and then bounce like it's done before? Absolutely. So point being, that green line 1075, very interesting level from a support standpoint. And then up here, that resistance trend line, which I've talked about in past stocks. So you get the idea behind that self-fulfilling prophecy. Next one here, SQ, another one of these very popular stocks. And kind of the same idea, but this one's different because the stocks we've been looking at previously, they were still just basically falling and falling and falling. But with SQ here, you already have several candles with these lower shadows. So if you want to call these, dojis, hammer candles, but point here being 3 hammer candles in a row after a big beatdown. And I know I'm repeating myself, but I always want to reiterate this because I don't want anybody to think that there's any things as a guarantee. So, and I wish I could say that the market was this easy. I wish I could say that because there was a gap down, then because this thing got beat up, but now because there's 3 hammer candles in a row, that for sure this is going to bounce. That's not how it works. But is it valid to think that, hey, you know what, maybe just maybe this thing has found a bottom, especially when you factor in the volume of the last 30 minutes. So huge volume, nice little hammer doji candle there after, 2 other hammer candles. Yeah, that is a more than valid thought to have. And assuming you can honor stop losses, then you have a very interesting risk versus reward situation here. So if you like to play stocks that get beat up, that present a very logical, potential bottom formation. And then, of course, like I said, this is all dependent on your ability to control risk and honor stop losses, then yeah, you have a very good risk reward situation here. So certainly one that I'll be keeping an eye on. And it's a very interesting setup here. Next one, AMD. And for those of you that did not see the previous video, just a quick recap there, talked about that level of resistance at 125. And I mean, the power of charts. So I'm not patting myself on the back here, but this is why I believe everybody should learn about charts, should learn how to use them. So again, definitely get signed up for that free class. Because I mean, check this out. Price gap down, bounce, 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 bounce. And look, oh, what a coincidence, right where it happened to get rejected from, that red line, which, I didn't just put there. Now, if you don't believe me, I'm not offended. I could be a stranger to you. All you got to do is go back in the video archive, watch the video from yesterday, and you'll see that I put that line in place, and sure enough, the price got rejected back downwards. So I'm not patting myself on the back, but again, I am patting technical analysis charts on the back. They're a great tool to use. Perfect? Of course not, but something that needs to be learned and needs to be applied within your trading. So, if I can use that as a plug for you to encourage you to get signed up for that free class, then definitely do so. But 125 remains that main area of resistance. And as far as supports are concerned, you have the same levels that I talked about previously. You have that purple line now, the 50 period, and I say now because it's moved higher than where it was the previous video, and that's currently at 118.50. Then you just also have 117.50 down there. So AMD, it's definitely not looking as bad as some of these other stocks, but it's definitely starting to pull back a bit more. But to AMD's credit, because it is still above that 50 period moving average, it's still more than valid to think that this is just simply a healthy pullback right now. But if the price starts to crash down through these areas of support, then yeah, that could definitely be a sign that the bears are even coming back into play with some of these stocks that AMD's is part of. The chip stock, sorry, as I was saying, stock AMD's part of. What am I talking about? Chip stocks. I couldn't think, but yes. So I meant by, the chip stocks have been doing halfway decent, but yeah, now maybe potentially like AMD pulling back. And then the next one here, Tesla, TSLA. And once again, I'm not patting myself on the back, but I mean, check this out. Huge bounce. So a great breakout opportunity there, but look where it got rejected. I mean, literally right at that red line that I drew previously. So like I said, just you got to have charts in your tool belt. And I won't do any more plugs, but I mean, just seeing these things, it's amazing how well this can all work. But going to do some house cleaning here because actually that red line needs to stay there. That trend line has played its purpose here. But the main area of support that I think myself and many others are going to be watching, long, shorts, everybody in between, is going to be right there at that 880 mark. So 880, a very, very interesting level as a potential, point that maybe some people from the long are going to try for a bounce. Maybe shorts are looking to play some sort of breakdown. But if this does recover back upwards, then you have that 915-ish, 920-ish area as this generalized area of resistance that you're going to want to keep a close eye on. But overall, I think these are two of the, quote unquote, self-fulfilling prophecy points that people are definitely going to be paying attention to. So that wraps up the top 10. Like I said, want to invite you to get signed up for the free live online class. But also, if this is too last minute for you, you already have something on your schedule this evening, or if you're watching this Friday morning and you've already missed it, just drop me an email to clay@claychar.com and I'd be happy to send you a link to the recording. But definitely, if you can make it live, certainly get signed up. As far as the top 10 videos are concerned, if you enjoy this format, if you would like for me to continue to make videos like this, then please let me know by doing two simple things. Hit that like button, leave a simple comment down below. If you want to just leave an emoji, say hi, tell me what you traded today, tell me what you're watching tomorrow. But those two things communicate to me that you enjoy these videos, and as long as I know people are enjoying, then I will continue to put these watch lists together. So again, definitely get signed up for the free class. Everybody take care. Have a good one.